Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we're going to be looking at a ticker Viasat, ticker symbol VSAT. We're going to see if the stock deserves to be around $11. We're going to see what institutions and hedge funds are doing in terms of buying or selling. And we're going to do some advanced charting as well. See if we have any patterns or different supports and resistances we can track to potentially look for a price target. This looks like death, but we'll come back and we'll see if this is warranted. So I've done some charting on both FinViz and Thinkorswim. We like to look at the bigger picture, and honestly, the bigger picture is just one huge roller coaster, basically. Um, I'll go ahead and make my head small after we hit the subscribe and comment button or thumbs up. All right, you guys can see my screen now. Yeah, so basically, if you bought this in the Great Financial Crisis around 16, you rode it all the way up to 96, and now you're back down to 11 doll hairs. So, not ideal. Let's go ahead and see what we got going on here. The money flow, or I'm sorry, the strength looks like it's going with the bears. The momentum actually looks like it's getting ready to flip. Money flow is actually going up. And you guys can see this, right? Should I zoom in really quick? It's a little bit better. Money flow. And then our relative momentum indicators all the way at the bottom of the ocean. However, that can change rather quickly. So overall, it seems like a very neutral stock. And looking at where it was back in 2003, around $4, we're now at $11. We need to see if this makes sense to potentially buy now and just kind of catch the knife, so to say, or we just wait even further. So, all right, let's go ahead and take a peek at what we got going on. Our forward PE is 33, so this stock is likely a little bit overpriced, unfortunately, at $11. Um, they make 4.63 billion. They lose 1 billion 13 million. So they are not profitable. They do have a good quick ratio, so anything over one, they can pay off any debts, notes, loans, etc. So that is good. Don't really have a concern there with the company being at risk for bankruptcy or over leveraged, so that is good. Debt to equity is 1.5, which is okay, and then the long-term debt is 1.49. So you can see that they're slowly addressing the debt. Sales past 5 years, 17.9%. EPS past 5 years, negative 51.58%. That is not good. They're guiding 59% EPS growth next year. That still is going to be negative territory for EPS, it sounds like. Gross margins 28. That is very good. Institutions look like they're selling. Insiders look like they're selling. We do have shares float 106 million, shares outstanding 125. So 2023, they had 76 million shares. 2024, they added about 50 million shares to the pool, which really stings if you are a shareholder because it just dilutes the value of your shares that you're holding. They did this probably to raise cash for an acquisition, which makes sense given what we're seeing here on the books in terms, especially in the debt to equity. So we're going to go ahead and just dive into that, but let's go ahead and run our calculation here. They do have a market cap of 1,460,000,000. They are losing negative 1,013,810,000. And they have sales of 4,630,000,000. All right. Let's go on down, going on down, going on down. Okay. Q1 2024, they did 1.15 billion in sales. Q1 2023, they did 666 million. So they had quite a big increase, but they spent almost double on to get almost the same revenue. Almost, well, not quite. They're more efficient here in Q1 2024 than they were in Q1 2023. You can see gross profit here of 300, gross profit of 166. Q2 2024 this year, 1.1 billion in sales. Last year, 779 million. Cost of goods, 777 million compared to 572 last year. Gross profit was 207 million last year. Gross profit this year, 349 million. Gross margins, 31, 26, 23, 30, 26, 25, 24, 30. I think we're seeing a pattern of the gross margins being between 30 and 26. So I think that's a fair estimate. We do have a director buying $820,000 worth at $14.19. Then we have, these are not even directors here, so that's fine. Okay, we see the EVP selling. That was last year, end of last year. I'm not really seeing any red flags. I would say maybe even a green flag. I mean, this is pretty good. A director buying at $14.91, $820,000 is pretty good. Okay, onward. Let's look at their cash and get going on our calculation here. They have 1,811,000,000 in cash. Good for them. 600,000. Total debt 7.4. This is gonna bust everything. 7,498,190,000. This breaks our calculation. So this actually disqualifies from the projected stock price. Total assets 16 billion, total liabilities 11 billion. They have a $5 billion buffer there. So again, nothing to be very concerned about. Their debt really had, it just 2.5x Q2 last year. So that is pretty wild. And they've been paying down the debt ever since then. So they paid down 13 million, then paid down 19 million, then paid down almost 100 million, then paid down 10 million. So debt isn't a concern. However, when it does come to my projected stock pricing, it does break it. So we're going to disband in that. Total assets are also going down. So you can see the assets shot up by $10 billion. Liabilities shot up about $8 billion. And then we've seen a decrease ever since. Eventually, it's going to get to a point where the assets and liabilities are going to be pretty much pinned to the point where it's not going to fall much further. However, do we know when that's going to be? I don't know. I want to see if there is an exception of a one-time charge off here. So we're going to go down here. Q3 2023, negative 767 million. That is definitely an anomaly. You can see we go from huge, not so huge, continuing downward, and now negative 32. So this has, I think, maybe a couple more quarters, 2 or 3 more quarters for this to really become more healthy. So yeah, I mean, my calculation is broke. However, if we just kind of do it I don't even say old school. We're just not even going to look at the cash or the debt. We're going to leave that as that is. And then shares outstanding, 125,850,000. That's a target price of $40.34. We see analysts have 28, 30, 35, 15, 62, 51. So kind of all over the place. 67. This was back in 2021. All over the place. Sales, obviously huge at the expense of the debt that's been accumulated. What are institutions and hedge funds doing? Institutions own 78%. That is old data. New data shows that institutions actually own, all-time high. Okay, we're gonna have to do this manually, so just give me uno momento. So they have 120,117,295. We're gonna divide that by 125,850,000. So institutions actually own 95% compared to 78. So that is almost a 20% increase. We can see the all-time highs here, all-time highs of institutional ownership. Um, I think this company is in the midst of a solid turnaround. However, we're going to go to the advanced charting for this because it's going to get a little bit dicey. Okay, so 350 is our all-time low. Based on this candle right here, it looks like there is definitely some more downside coming. Unfortunately, I don't have, much control over that. That's basically how candlesticks work. I mean, it's literally just kind of in a free fall. Let's just do some mapping here. I mean, it's fallen out of this wedge. I don't know what can save this company. I mean, we see institutions and hedge funds. The big money is buying, but look at this right here. It's just like people are trying to sell this faster. They're trying to sell it faster than they want. I mean, this is a solid. That's solid, but that doesn't help right here also. Yeah, I don't, man, this might get worse before it gets better, honestly. They're not at risk of bankruptcy. They're not over leveraged. I think they are really just literally in the middle of a turnaround. And the data is just taking time to reflect. So, for example, watch what's going to happen here. So, earnings were August 7th. So, we'll probably see earnings again in November, December. But look at this. Once we have our Q3 2024 coming out, we're going to get rid of this 767 number. And now the profitability is going to be much healthier looking by several hundreds of millions of dollars. They're going to pay down debt. They've been paying down debt every quarter. So debt will be more manageable. Uh, Potentially, I mean, Q3 of 2023, this might be a huge testament to the company. Q3 2023, they did 1.2 billion. If they don't do more than 1.2 billion here in Q3 2024, that is gonna hurt and sting a little bit. However, I still think the company is on a good path, really. Their gross profits are continuing to go up over time. It's digesting these last 4 quarters basically. Once we have Q3 again, Q3 announced this is going to drop off, and then Q4 this will drop off. So the company's going to look much healthier around Q2, around August of 2025. So I think we're going to want to pay attention, obviously, to the next quarter. We want them to report more than 1.2 billion in sales. If they do not, if they do not report more than 1.2 billion in sales, that is going to lead to a drastic move in the stock price, in my opinion, to the downside. If they can hit a 1.2 billion, 1.3, 1.4, 1.5, that's going to be a testament to this company, and that's when I think we've hit the bottom of a turnaround. And again, if you are someone who's risk averse and you want to get into the stock before a good earnings call happens, because I mean, if they have really good earnings, the stock could jump 10 to 20, 30%, which is insane. And you would miss out on that appreciation. You probably feel like you got fear of missing out. The rocket ship, the boat left without you. So again, I think if you are someone who has time and a horizon to invest, if you have 100, 1,000, 10,000, 100,000, $1 million to invest, maybe take 10% of what you're willing to put into this and maybe just buy 10%, 5% every 2 weeks. So like on $100, you'll do maybe $5 to $10 every 2 weeks. And extrapolate that out to 1,000, 10,000, 100,000. If you have 100,000, maybe you put 5,000 in every 2 weeks, 3 weeks every month. It's really up to you. This is something I would typically get into. However, I just don't. I don't know why they're not able to break the 1.2 billion dollar revenue like they did here in Q3 2023. So kind of a bit of a beige flag there, but I mean, just this is going to be something definitely to watch going into Q3. So I think November or December. So again, I think it's time to potentially start adding if you have the risk appetite. Again, this could go from 11 to 5, maybe. I don't know. Hope for the worst, or expect the worst, hope for the best type thing. Slowly scale in, really just take your time. This institutional ownership is up regardless of what we're seeing because this site right here, Fintel, is more up to date. But that's Viasat. I mean, there's really no let's see. Is there any support that we can watch for? Let's see. We've got right here. $8.05 is next support. That's $8.05 and then $6 and 30 cents. So quite a bit further down, the Japanese candles here just really represent a move down. I mean, look at this huge upper wick, huge selling. I mean, huge upper wick, not as much selling. Gosh, there was 13.8 million shares here. On this candle, there was 51.3 million. That's unfortunate. I think this company is going to go places. It's just going to take time. If you've got time to scale into this stock and you are risk averse, potentially do that. If you are someone who is looking for 10% average gains a year, look at SP 500. That's more not as volatile, pretty stable, doesn't get your emotions going. Viasat, I don't think they're a part of the S&P 500. No, they're not part of the Russell. So yeah, that's my 2 cents. I would wait on this one. Q3 2024 is going to be huge. If they don't break 1.2 billion in sales, this is going probably 8, maybe 6. That's all I've got. We're waiting this one out. Thank you so much for watching. Hope you're doing well.